Good job downloading my one-page perfect outcome map. This shows you the steps to getting you from where you are now to mission accomplished. Be sure to watch this short video so I can show you exactly how people just like you are using this strategy to quickly become free from monthly mortgage payments forever and improve their cash flow. One of the first questions I'm always asked is, instead of a reverse mortgage, should I just get a line of credit against my house or maybe refinance and pull cash out? My answer to that is maybe, but until we analyze your current position and learn your goals, we won't know what type of loan will best get you to your perfect outcome. It is important for you to know if one of your goals is to stop paying your monthly mortgage bill altogether, some type of reverse mortgage will be the answer. I say some type because there are numerous new options available. Let's get started, shall we? There are two types of mortgages, forward and reverse. Conventional or FHA loans, which are probably the ones you're most familiar with. The equity line or the equity loan. The only difference between these last two is that one is adjustable and you can dip into it whenever you want, and the other has a fixed rate. If you take the fixed option, you'll take your cash in one lump sum. In contrast, the reverse mortgage is nothing more than a deferred payment mortgage, meaning you don't have to make any payments until your loan is paid off. And if you add the additional credit line option, that payment will also be deferred. Now, just so you know you're in the right place, I want to underscore that this strategy reflects the exact system that I have used to help countless other older homeowners better their financial position. Now, I promise I won't bore you with graphs and statistics. I'm sure you're already aware what a national problem we have with a lack of income and savings for retirees in their senior years. Over 22% of Americans retire with less than $5,000 in savings. To make matters even more uncomfortable, nearly 2/3 of households headed by older adults are carrying more debt than is healthy. My guess is that many of you agree with this slide. If you can stay in your home, you want to. But how realistic is this, really? I'd like to tell you about one of the newest reverse mortgages, the Jumbo Credit Line. It's available for homeowners 55 and above. It's become extremely popular for homes valued at over $1 million. Note I say home value, not the size of the loan. This means you might opt for this type of mortgage even if your loan balance is on the smaller side. Just to give you a brief understanding of the broad range of uses for reverse mortgages, I have a client whose Social Security barely covers her most frugal monthly expenses. She was able to gain relief by stopping her mortgage payments and having a credit line available for emergencies. She's sleeping well for the first time in years. On the very other end of the spectrum, one of my clients owns a home valued at over $8 million. She opted for a $3 million reverse mortgage with a fixed rate. She felt the money she would otherwise spend on her monthly payment was better used for investing. The point I'm making is that every reverse mortgage is different. It's important for us to know exactly what your needs are. Only then can we advise you properly. Let's see an overview of how a reverse mortgage works. Ms. Homeowner owns a home valued at $1 million. Her current mortgage is $200,000, and that leaves her $800,000 in equity. Now, she decides that she wants to do a reverse mortgage. Her age and the property value qualify her for a total $600,000 loan. She chooses to only pay off her current mortgage of $200,000 and leave the $400,000 balance in a credit line for later. For her particular situation, the savings from not having to pay her mortgage every month give her the additional spendable cash flow she needs. Now, every month she doesn't pay her mortgage, the interest gets added to her mortgage balance, so it grows. but her equity line balance, which is just sitting there waiting for her when she needs it, is earning interest. So it's growing, as is the value of her home. Now, let's say she decides to use some of her credit line to help her granddaughter pay her college tuition. She decides to take $30,000 from her line of credit. When she withdraws that, it lowers the available credit line by that amount and adds it to her mortgage balance. The result is she has $30,000 to give her granddaughter, and she still has no mortgage payment. I'm going to email each of you this graphic so you can refer to it at your leisure. Now, let's get to some of the questions that I know you have. The first question I'm always asked is, who owns my home? You still own it, absolutely. Nothing changes. It's still yours. All you are doing is deferring your mortgage payments until you pay off the loan when you move, refinance, or pass. Now, the next question, what happens to my spouse when I pass? Well, it used to be that his or her non-borrowing spouse had to vacate right away. This is no longer the case. The remaining spouse can continue to live in the home. Now, a question that I am always asked, why do I hear about so many people who have reverse mortgages losing their homes? Well, this is an understandable concern because we've all read about people with reverse mortgages losing their home to foreclosure. What the articles don't tell you is that the only way the bank forecloses is if you stop paying your homeowner's insurance and your property taxes. But here's the truth. No matter what kind of mortgage you have, or if you don't have a mortgage at all, don't pay your property taxes and your house is going to be foreclosed, period. Let me tell you something I've seen so you can be aware. Let's call the homeowner Jeff. Jeff doesn't have enough monthly income to live month to month, so he takes a reverse mortgage. But he's so excited about having so much extra money in his credit line that he squanders it quickly. In a couple of years, he's back where he started financially. He still has no mortgage payment, and that helps him, but he doesn't have enough money to pay his property taxes. He still has a lot of equity since his home is appreciated, so he can refinance to access more cash, but if he blows through that as well, he'll be back where he started. It is my humble opinion that this type of mortgage is only for those who are responsible enough to manage their money. I've seen it save the life of some older adults and at the very least make living much less stressful. Okay, let's get on to the next question. What about the fees? Well, the new jumbo credit line isn't backed by FHA, so the fees are very low. Each loan is different, and when we discuss your specific circumstances, we can determine just what your fees will be. Reverse mortgages were developed in 1961, and they've changed over the years. The traditional type of reverse, which is still in great use today, is backed by FHA, and like both forward and reverse FHA loans, there is mortgage insurance involved. This is what makes the fees high, although the rate is lower. Depending on your situation, your property value may mean you're eligible for either of these, the FHA or the jumbo. There are benefits to both. Of course, you'll have more questions. For now, just know that the greatest difficulty for homeowners when they're contemplating a reverse mortgage of any kind is not having a clear roadmap to follow to get from where you are here to the finish line, the payoff. If you're serious about relieving your financial stress with an end to mortgage payments and a backup line of credit, then this systematic approach will help you get there. So the three main steps are discovery. Together, we'll discover what your goals are and what I can do to make this happen for you. The next stage, choosing the right loan. Of all the options open to you, we will choose which loan will get you to your goal. And the last stage, where the rubber meets the road, we'll put it all together and get you to your goal in less than 60 days. No more mortgage payments. So to sum it up, this loan is for you if you want to age in place. if you want to free up cash each month by having no mortgage payments, and if you feel that a backup cash reserve will make you feel more secure. If this sounds like you, let's explore it further. Just click the link below to schedule your free strategy session. I look forward to speaking with you.